Alright, so in this video, I will teach you a strategy that is included in my upcoming course update. If you don't have access to my course right now, you can get access to it for $97 only. You get private Discord server where I share my own trades, monthly course update with new videos, awesome community of successful traders. Then we got the SMC basics, basic trading strategies that require no daily bias, ICT essentials, advanced trading strategies, some proof here. After the update, the price will go up to around $150, so make sure you get it right now. So let's move to the strategy. So what exactly are we going to do? So this strategy uses daily power of 3 and standard deviation projections. This happens every single day. So the setup is going to be there every single day. So I want you guys to watch the entire video in order to understand this whole strategy. So 95% of the candles are going to have a wick either to the one side or both sides, right? Only 5% of the candles will not have a wick and a complete body, if that makes sense. So we want to trade when we have a wick and then we have expansion to the downside. So the wick is mostly a manipulation move. Once the manipulation is over, we want to get into the trade somewhere around here and then take the entire trade, or take the entire expansion to the downside, if that makes sense, right? So let's assume that this candle is a bearish daily candle, okay? So all you have to do is mark out the daily candle opening price. Now, once you have marked out the daily candle opening price, you have to drop down to 5-minute time frame. Once you drop down to 5-minute time frame, you will have your opening price, right? Now, the price will first of all manipulate. Okay, so let's remove this for now. And we will see price consolidate for some time. And then we will have a market structure shift, and then we will have a manipulation, which, as I said before, is going to be a wick, right? We will see a manipulation move. Now, the goal here is to measure the manipulation. We need to know where the manipulation is going to end. And to do so, we use standard deviation projections. So use your Fibonacci and use your Fibonacci from the last low and last high that was formed before market structure shifts. So that is the opening price. I want to see price go below this level. Okay. First off, I want to see price go and dip below here and then give me a market structure shift. Now it can dip and give me a market structure shift above the opening price, but it has to go down to some degree. Okay. For example, here, and here, it went down and then gave you a market structure shift. All right, so you use your Fibonacci from the low to the high, and you will get these projections. So you can copy these numbers, just disable this, just in case you want to copy these. All right, once you have these copied, now you have to put your focus on the -2, -2.5, and -4. So we are first of all measuring the manipulation move. So once price goes above -2, you have to start looking for a market structure shift, because from here onwards, price will now reverse and expand towards its original direction, if that makes sense. So over here, we had a shift in the market structure, right? And now we are projecting the manipulation move. So here, the manipulation move can either end just above -2, it can end above -2.5, or it could go even further to -4. But mostly it's going to be somewhere around here. Now from here onwards, what you're looking for is a shift in the market structure. Now, once you have a shift in the market structure, you have to now measure the expansion move. And to do so, you want to use your Fibonacci from the last high to the last low that was formed before market structure shift. Now, for the target, look below the -2 and if you have any liquidity level, any significant liquidity level, it could be a low, could be a high, below the -2, that is your take profit level. Okay, so you can then take your entry from the breaker block or a fair value gap or an auto block. So I usually love to take my entries from auto block. I would take my entry, I would take some partials around some fair value gap that could be here, and then the last take profit level would be this liquidity level around here. And similarly, if we invert the chart here, and let's do this. So we have, let's say, this is the opening price, right? And we are bullish. We want to see like the candle expanded bullish, right? So this is what it's going to look like on the 5-minute time frame. We will see consolidation probably. All you have to do is look for a market structure shift. Once you have a market structure shift, right, you want to look for, have to measure the manipulation moves. So again, from the last high to the last low before market structure shift, price dips into this level, right? And then we get a market structure shift. Then once you get the market structure shift, we want to measure the expansion move, and that is going to be here. This is the liquidity level inside this key zone area above -2 level, right? This is what you have to, this is like the entire strategy, guys. So this is how you can measure the wicks, the entire daily power of 3, if that makes sense. This is very easy. I go into more detail in the course update video, but this should be enough. What I've taught you here, it should be enough. So let me give you guys some examples, and then I'll end the video. And also, my apologies, there's no face in this video. I'm a little bit sick, but yeah, let's end this video. All right, guys, so here's example number 1, looking at USD CAD on the daily time frame, and we're going to study today's candle that is still in formation. So marking out the opening price, let's drop down to 5-minute time frame and see what happened. So going back here, what I can see is this is the opening price, and price went up, gave us a market structure shift, right? But if I use my fib from here to here, price never went down to -2 and -2.5, but it went up, swept the liquidity here, right? And then it gave us a market structure shift by breaking this low. So using our Fibonacci from the last high to last low, what you can see, price dipped into -2 and -2.5, but we didn't get a market structure shift. However, price dipped into -4, right? And then we had a shift in the market structure. Once we have a shift in the market structure, I can see a clear fair value gap down here in the discount. Now to measure our expansion move, we want to use our fib from the last low to last high. And this is -2 here. Look slightly above it, and we have this high over here. That should be a take profit level. So this would have given you around 7 RR if you took your trade from this fair value gap. So let's move on to the next example. All right, guys, so here's example number 2, looking at USD CAD on the daily time frame. We're going to study this candle. So let's mark out the opening price, and then we drop down to 5-minute time frame. Now, if I go back here, what you can see, this is the opening price of the candle. Price goes up and gives us a market structure shift. So now we want to measure our manipulation move. So let's use our fib from the last high to last low. Price dipped below the -2.5 and then gave us a market structure shift. Before market structure shift, we had a small liquidity sweep, as you can see right there. And afterwards, we have a shift in the market structure. Now, if we look closely, what do we have? We have this fair value gap. We also have this auto block here. So price respected both fair value gap and the auto block. Now, to measure our expansion move, we can use our fib from the last low to last high. And above the -2, we have this liquidity level. So that is going to be our target level. And yes, you can take your entries during Asian session for this strategy. So pretty simple, guys. Let's move on to the next example. All right, guys. So here is example number 3. I'm looking at AUD USD. So this is the opening price of the daily candle right here at 17. And you can see that this green candle is both a high and a low. So if you're wondering what indicator I'm using to determine highs and lows, go to indicators, type in fractals. And the one by Rachel T is the one you should use. And that's what I'm using. So we're going to use from, this is the low, this is the high, and this gets a market structure shift here. So we're going to use our fib from the last low to last high. And you can see price dipped above the -2, but we didn't get any market structure shift here. But then price went above -2.5. And from here onwards, we had a clean market structure shift. And above that, we have a very beautiful fair value gap. Now to measure our expansion move, we're going to measure from the Fibonacci from the last high to last low. And just below the -2, we have this this low. That should be a take profit level. You could have also targeted this, but we want to be safe, so we just targeted this. So that's pretty much it, guys. It's very easy and mechanical in a way that you can use it every single day on every single pair. Just pick 3 to 4 pairs and use this on those pairs, okay? You can also use them on assets. So thank you so much for watching, guys. In the upcoming videos, I will reveal something very special, so make sure you subscribe. All right, I'll see you guys in the next one. Goodbye. Mwah.